Pissed off. Pissed off. Pissed off.
G'day guys, Sam here. Today's Saturday, 2nd of March. Goes quick, doesn't it? Let's look at TrueBit again and do some updates. We have mapped our levels, not complete, but only for the area of interest at this point. You can see this wick that's gone all the way up here. That causes a problem with using the tools in this stage, if they're applicable. But anyway, where are we at? We have broken the weekly level. That is our weekly level there, and that's our support. We also had the monthly here, and the monthly, along with the Fibonacci, is playing its role, 786 level, based on the way we've set it out. We had our selling climax, secondary test, and spring. So from a macro perspective, that is our AR, all the way up there, in a way. Or can we say here, use this, because this is very strong. Geez, all the way to 58 cents. So that's where the dilemma is. If that is our AR, and what I mean by AR, guys, those newbies, if you're not sure, that's our structure. Our AR there could be that. And if you align the weekly, that's that blue line there. So let's just look at it close up so you can understand what I'm talking about. So we have our AR there on the body of the candle. That secondary one is probably that thrust there you can rely on. We didn't quite make it, that middle section, so it's a bit different. However, we can also look at this as a selling climax. This is our secondary test, and this is our spring. And therefore, we can also say, okay, selling climax, that is our AR, and we've broken up. So at SOS stage, that's how I look at it. So if this is our LPS, which makes sense, on a smaller time frame, and this is our SOS stage. So we can visualize what I've been saying, and that was our stages, phases, pretty much. If I got it right with the other stage, then this macro could be, if it does take place, even better. So if this is our AR there, whoops, let's just clean this up a bit. If this is our AR level, then even better with the forecast. We can use that means of measuring. That could be a measured move. And for the short term, that is a measured move. The minimum, this is the minimum. And there you go. It hits our 60 cents range, which makes sense. So, what do you call it? Mathematically or Fibonacci wise, everything lines up. There's symmetry in there. If this is our AR level, then what we can do with the forecast is significant. So we can stay, all right, that, whoops, where is it going? Okay. I'll need to change the settings. So we can make that a golden ratio, guys. And therefore, we have bigger targets. Let's just hope. So we can see easily that this is going to be rejection. If this is the cup, so this could be a cup and potentially handle. And boy, that could be the targets. Looking forward to it if that's what takes place. And you know what? Very possible. So you don't want to miss out. The smaller version is here. That is our range. That's the 618. And then we've got these ones short-term wise, the targets. You know what I mean? So you can see how It's aligned with Fibonacci Wyckoff structure, and we are applying our Fibonacci rules. And hopefully, it's the latter, that this is the real major neckline, and then we get these levels up. However, if we were to say, okay, that's log settings, if we don't, we reduce it, then we have this. This is what I hate about trying to forecast. That level becomes a bit more realistic. So we've got that with logs, non-log versus log, and this will be a major target if we pass this level. That will be a major target. A big rejection, I would imagine it would come down 40-50%. And then I would look, so if price was to go here and then just fizzle out, depending on what Bitcoin does, we might actually just go past, get that big pullback and the last effort, and here. That could be the case for the bull market. And we'll see how we go. There's two scenarios. I've got no idea which one's going to take place. We just watch Bitcoin and the alts trail away. And looking at Dodge or Dogecoin, we had this channel laid down maybe a year ago, and just left it as it is. And you can see the accumulation structure, and we on the monthly basically breaking out SOS stage on the Wyckoff model. The 200 moving average acted as support. Once we broke above it, acted as support, and off we're going. And then we had this, I suppose, what's this one here? It's a monthly. The weekly 200 weekly SMA acting as a resistance along the way once it's come back below it. So we mapped our levels, and we've got moving averages. And when we look at it closer, let's just go to the Elliott wave count. I say as a 1, 2, 3, 4, and obviously we're looking for the 5 higher. What can that be like? Well, we'll just do the minimum stuff, and it wouldn't surprise me that we hit these ranges. The 1.4 and 4 is probably the main target, but we might just get the 1.618. We map when we look at the Fibonacci, it makes sense. Whoops. When you look at this, when you just move it across, you can see how the 618 level acts as resistance over there, which makes a lot of sense. And we might just hit that. That is a target for now. Pull back into this level with the volume profiles, and then potentially break up. This is a reaccumulation structure, so maybe it's a cup and handle type of stuff. We don't know what kind of formation it's going to take, but that's what looks like at the point and the targets. Let's look at it close from a weekly perspective. And we've got a Fibonacci set out from other ways of looking at it, looking for the bottom. I don't want these now. Just give me a sec. Okay. So we've taken the 200. See how we've got the moving averages there? If we look on the 3 days, even better. You see, once we're using these moving averages for support, hit our weekly level of resistance. We've done a Wyckoff reaccumulation structure, and we've broken out. And the moving averages just kept on being support all the way through. So we've come to this neckline that looks like resistance. The dotted lines is, I suppose, is the current price. So the monthly level is likely to act like resistance. Might do that, come back down, might break through, come back down, but I don't think it's just going to run away. Then we've got these levels, value area highs for later on to trade. So the breakout's gone. We might just pull back a little bit to this range and then eventually break to the upside. So looking at here, we hit a few key levels and we've got the rejection. There isn't a shorting position yet, not with that candle. Let's look on the 1 hour. That does look like a rejection candle. Still 50 minutes to go. But you can see how those, even that little thing is respected. The monthly, not sure why that level is a major rejection. Maybe liquidity. Let's have a look. Here it looks messy. Very messy to figure out why this black line is the main resistance. Let's have a look at it from this perspective, from there to there. Let's see if there is any common. No reason why. Just occurred to me now. Sorry, guys. Liquidity. Shorts came in, so there's a bit of liquidity there, and we took that out. Basically, almost. Maybe on different exchanges, it's taken out. So this is on Binance. Maybe on other exchanges, that's taken out. So that makes sense. So the next level is up here. So we can see the range. That is a range. Let's just put that in there. And so that's the bottom of that range, roughly. And that's the top of the range. Okay. So that's pretty much it for explanation. Just taking a bit of liquidity. The shorts have come in all the way through. So it's taken a whole bunch of liquidity from here. This point, that bucket. It's taken all those liquidity shorts, especially that one there. That was probably the main target. Anything above this one. So let's just label it. And I'll label that one as well. And then we have the old major targets up there for future reference. Now you can see how that reflects, and we're looking to break to the upside. Maybe just get past a bit more. If we get another rejection candle, so that hasn't been rejected yet, because we want to see close below this level, actually close below this level here. So if we get a rejection, then we look for lowers. Then we'll look for the shorting position here. At the moment, there's no shorting position. This might use this as support and then break up to the upside more. Just keep an eye on that one. But that for the short term, we're in a position where it can go further up or reverse, and there's no clear signal at this point for a trade. Looking at Solana, and while we were bullish, and we timed it well this time for the breakout. The 2-day chart actually does a good job with the RSI. You can see this trend line. That was a good point of jumping in. And we saw this as accumulation, reaccumulation, and a breakout. We've got the monthly level, and from some method, we got the 1.618, but I'm still looking for the monthly level of 143 to be hit for the rejection. So short-term wise, we're looking at these levels going sideways, maybe dip below this, take that out, and if we regain that level, if we go below, taking out the liquidity there, and then regain this monthly level, then we are bullish for more highs and potentially hitting that target there. From a macro perspective, let's have a look. If we look at this from a Fibonacci perspective, swing low, swing high, and you can see we've just broken the 786 level, which is a blue sign. I wonder if this 886 lines up with the monthly. Let's have a look. No, it doesn't, but we'll leave that there. We've got some methods of finding resistance here using a fixed range volume method, and it's a useful tool. And we're looking at that level in a way for finding resistance from there to there, we probably find resistance. We've got the monthly level there. So what we might have is this lower level. Let's have a closer look. And I'll usually like to ignore the right side just to be honest with ourselves. And if we were to click that and just map it all out, we've mapped it out. You can see just by that model, when price comes back up, that was a, well, it's a monthly level as well, but that was a reason for shorting as well. We haven't added our moving averages, but I'm sure there's more to that. We'll get rid of the 10 and 20 moving average for the time being and leave these. Where's our, okay, let's just add our template. Just all the moving averages that might play a good role. All right, moving averages are mapped out, and we were looking at this at the time. We thought, yes, once it regains a moving average, look at that, perfect. Well, this is our ribbons, our standard, and it's broken up. Now let's looking at the top value level low from the previous. Actually, that's high. That tells us, not sure why we got this background. Get rid of it, and we want to get rid of this background as well. And just make the big picture there. That's it. So when we can see, we can just hide that for a sec. Value area high, low from the previous. So we have a resistance level here, short term, this level. So it wouldn't surprise me that we come back down. Don't forget, from a micro perspective, if you're looking to jump in, that is done. That is a reaccumulation, done and dusted, I believe. This is the shakeout phase, SOS phase. So we might be in a range just here for a while, and then bang, further up. So we're going to consolidate under this monthly and probably above this 786, and maybe even find this as resistance as well. We will tap that and we'll range SOS stage. If you're not sure what that means, it's basically similar to this stage here. We can continue on. And so that's usually that's what takes place. I'm not saying this is going to happen with certainty, but that's my thoughts at this point. The moving averages, once regained, you can see how even Fibonacci probably took its role here as well. Yeah, 786. Yeah, there was a harmonic there for sure. Let's see how that goes. I'll just leave that. Anyway, that's it. Small time frame, 1 hour. Let's see if there's anything there. No. So yeah, we're actually done it here, didn't we? That's what we're thinking at the moment. We should probably synchronize some of these as well. There we go. Perfect. So again, back to here. If we see a swing, the only trade setup that I'm looking for, if it brings back up, add more to my already entry. I had some orders down here that maybe there might be a flush, and we take the week. There might be that case with a weekly for liquidity hunt. All there, we got some orders just sitting there just in case, and then back up again. But it's probably unlikely to take place. I'm going to leave it at that, guys. There's not much else to talk about. Looking for more highs, and this is probably the last level to jump into. But we have that likelihood as a long, long leverage squeeze, and that could be a nice pullback, maybe even further down to here. But that's so I'm going to leave it at that. Thanks again. Cheers.
There you have it. Please give Sam a like, Share and subscribe to his channel to support him for doing more of these posts.